I would like to take this moment to say that I'm not a financial advisor. Anything I say should not be mistaken for financial advice. This is for entertainment purposes only. The problem with the crypto market is that people view it as a way out of their financial problems. Sooner or later, you're going to find that it is not as easy as it seems. And many amateur investors learn the hard way that there is no easy way to actually make money. Just like everything in this life, you have to learn how to do things right. Much of the mistakes amateur investors make is falling in love with their investments. Imagine for a second if you had sold your dogecoin at 75 cents. You would have made a lot of profit if you had bought at 5 cents. Many have fallen into the trap of holding the token or coin for a long time to see if it will pay off eventually. But if they wait, how can they be certain it will go up again? There's really no way of telling for sure. You have the cycles of the market. It is the same in the housing market, stock market, the bond market, etc. If you really think about it, we are under the mercy of the political and inside aspects of the market. If you rewind 1 year ago, the people saying great things about the future of crypto without hesitation, well, they would seem to be the greatest investors in the world. Most people don't realize that the people they listen to are prone to emotions. The hardest thing about investing is to control emotions. We react to what is actually going on. For example, when we see people getting rich on crypto, we react by wanting the same thing. We humans are prone to imitate our surroundings. We can even argue ever since we were born, we were predestined to copy what we see others do. This is how we learn as babies to speak and to eventually develop a personality. The lesson to be learned in all of this is that there is a point of tolerance one can take. Investors who are actually walking out from the crypto market are those who are most likely looking for profitable ventures. You haven't heard about Anchor by Spotify? Let me give you a rundown. Basically, it's the easiest way to make a podcast with everything you need all in one place. Here's how it works. Anchor lets you record and edit podcasts right from the phone or computer. So no matter what your setup is like, you can start creating today. Then you can distribute your podcast to the most popular listening platforms, including Spotify, with a single tap. Anchor is also the only place you can publish video podcasts to Spotify. With Anchor, creators can earn money in a variety of ways, including ads and podcast subscriptions. And best of all, Anchor is totally free. Download the Anchor app or go to anchor.fm to get started. In my previous episodes, I've always communicated the importance of patience. As you can see, yes, people sell their positions and follow the crowd because other people are scared of losing their money. Most people who invested a year ago and looked at their profit going up and up and up and up are the same people who are losing most of their investments. The wise people who are actually the ones who sold for the profit, because the people who held their positions are the ones who are losing right now. I have always made it clear to my listeners that crypto is indeed a trader's market. Professional traders use the crypto market as a trading platform and nothing more, a playground where they can have fun at the expense of newbies. It is somewhere where they can play their game. They don't really care about the long-term aspects of an investment. They come and go. Are they smarter than the average investor? No, because most of them are probably losing. Just like in the stock market, there are good traders and bad traders. While the majority are bad traders, the good traders know when it's time to sell. It is what they do, and they have trained their minds into thinking differently than ordinary people. In conclusion, a person can't simply tell what is or what isn't by what they believe in their minds to be true. The majority, 95% of traders, will be failures, while the 5% are considered to be successful or professional investors. It really isn't for the faint of heart. The harder thing to do is actually maintain the level of success in which they continue to have continuous success. Past success doesn't guarantee future success. A strategy that worked then may lead to failure now. So what is it that attracts traders to the crypto market? Well, that's simple. Price movements. The volatility is music to a trader's eyes. For example, when a year ago Solana was $19 per unit, a trained trader would have then to decide whether it was going to keep going up. If something like Solana, for instance, doubled within a week, a trained trader would have sold it at $38 per unit. The only thing that matters is profit, and they don't think about the loss opportunity. If the same crypto moved up to $60 per unit or $120 per unit, most people would simply just let it bother them. But not these guys. They move on to find the next opportunity. This is easier said than done, because great traders do a lot of research. They are usually up at 6 o'clock in the morning reading the Wall Street Journal or some newspaper articles about finance, business, etc. In other words, they are boring people. They are flexible and constantly think of strategic ways to win. Profit is king. Thank you for listening to Crypto Intuition. If you haven't heard my previous podcast, please visit anchor.fm/cryptointuition. This podcast is ad supported, and by listening to the quick ad, you support my program. Thank you. Till next time.